I had a very successful event in Singapore. I was there for 10 days. A lot of you showed your affection on me wherever I went, whether it was the streets of Singapore, whether it was at the restaurants, the malls, and more particularly at the events. I wish to thank all of you from the bottom of my heart. My team felt that I had never done a full fledged event in Abu Dhabi, and they wanted me to do so because we have a lot of friends there. So the next event would be in Abu Dhabi on the 5th of October. Those desirous of participating in that event, drop a message at the WhatsApp number given below or send a mail at the email given. My team will get in touch with you.
Hi everyone, welcome back to Be Rich. There's been a lot of news which has been floating around about mutual fund companies, and Albin and me were talking before the video started about an article which he had shared with me about which showed mutual fund distributors exceeding the cap they are allowed to charge customers, so-called their commission, and they came back pushing back saying the data is not accurate, while the report says they have been gouging the customers. So I thought first we'll discuss some of you basically how the mutual fund industry is set up in India, how it works. Then we can talk about mutual funds in whole, active and passive. Then I leave it up to you. I'm not a believer in mutual funds because I have the time and I have the bandwidth to sit and research stocks and invest on my own. And I rather do that because that is the school of investing I've been brought up in from my dad and my brother. We like looking at individual companies and being business owners, and we're not trying to grow wealth through investing in the stock market. We're trying to grow wealth by investing into businesses. So there's a critical difference here in the kind of reference point which I wanted to give you, why it is different. So that's why Anand is always against investing in mutual funds, be it passive, be it active. Even sipping, we recently did a video where he gave the problems of sipping, because sipping requires fundamentally a kind of mindset a very few people have, which is to be consistent. Consistency is very rare in human society because we as human beings find it very hard to be consistent, and we are distracted by the easiest things, and that is why social media is so prevalent and it's so successful in our society. So that kind of gives you the idea why sipping, though it is sold as a magic bullet, it is very hard to do it because being that consistent is very difficult. We all find spending money consistently very easy, but saving money consistently very hard because there is no real dopamine feedback coming for that behavior pattern, so we don't follow it through. That said, mutual fund companies. First, you have the mutual fund company itself. Those are known as the asset management companies. They are the main companies which are the ones who are creating these mutual funds which we all invest in. Under that, you have something known as a trustee, which is the governing body which ensures a mutual fund complies with regulatories and operators and keeps investors' minds and interests. And they are appointed by asset management company, and the entity is set up by them. Then you have the sponsor, which initiates the creation of the initial mutual fund. They contribute the initial capital to the fund, and they're responsible for appointing the trustee in the AMC. The sponsor can be a financial institution, they can be a bank or a company. So a group of you can decide, pull in money and go reach AMC companies such as Nippon or HDFC or ICICI and say, I would like to start a mutual fund, and here's the initial capital, seed capital, and we can float this. To head all this, you'll have someone known as a fund manager, who's a professional with the asset under management responsibility, who will manage the mutual fund for the investment. They make all the decisions on buying, holding, selling the securities to achieve the objective set out initially by the fund. This is all regulated by SEBI in India and the Exchange Board. They take care of this, and they have a set strict regulations which these guys have to comply with and follow. So under that, you have the AMFI, Association of Mutual Funds India, and they also part of the governing body, which actually sits and scrutinizes all of this, and they make sure they follow all the rules, these mutual funds, because there's a plethora of companies which are doing this, and there's something which you need to understand. There's something known as a distributor, and there's a guy who's asset management. So a lot of people get confused. They're like, so is HDFC a distributor? Is Nippon a distributor? But they also have a Nippon fund. So is that means I'm buying directly from them, or are they a distributor? So this confusion I wanted to clear up first. Let's take example for Nippon. If you go to Nippon and you buy a Nippon fund, you buy Nippon's UTI fund or Nippon, any of Nippon's labeled which says Nippon, and there's a fund name after that, then you're directly buying it from Nippon because you're gone to Nippon and you're buying a Nippon fund from them. But let's say you go to Nippon and you decide to buy an HDFC fund or an ICICI fund, then he's a distributor. So that is what you should keep in mind when you get into this. And distributors can be banks, they can be financial institutions, you can be an independent financial advisor, those SEBI registered advisors as they're called, and you can also be a distributor, you can be a national distributor, you can be online platforms like your Grow, ET Money, Zerodha Coin, Paytm Money, all of these guys are distributors. Why are they distributors? Because they make a commission for every single mutual fund unit you buy or you sell through them, they get a bit of commission on it, like your LIC commission. It's a commission industry. They are predisposed and they are incentivized to sell you a mutual fund, to push it to you, and whichever fund is giving him the most incentive, that will be the fund they are pushing to you. Any of you who have done any form of business or gone to any store, seen this, you will see products where the distributor or the store owner is getting the maximum incentive, being given the maximum display, being given advertising space, and getting pushed even logo space on your coffee shop outside. You will see it'll be written Albin Cool Bar, but there'll be a huge Pepsi logo on top of it. You'll be wondering, why is Albin putting Pepsi, huge Pepsi logo above his Cool Bar name? That is simple reason Pepsi is paying him money. It's as simple as that. So same way, this is how distributors work in the simplest form I'm trying to tell you. So I hope you get this. So the reason why I'm telling you all this is all being funded by you. Like how when you buy a cell phone, an Apple phone, or a Nike shoe, you're not only buying the Nike shoe from the Nike, you're not only paying for the making of the shoe, you're paying for all the sportsmen who are being sponsored by Nike. I hope you can process that. So if you go and buy a Nike bat, cricket bat, you are not only buying the bat for the wood and manufacturing and paying the laborer, which is a very minimal cost actually. Majority of the cost which you're paying goes to paying all the sportsmen like Virat Kohli, Dhoni, and all these guys who are being sponsored by them. Will be quite a huge change from this. Then on top of it, of course, the company itself is making a profit. That's why the famous videos you see out there saying the iPhone is only cost to make an iPhone is only $10, $12, but they're retailing it at there's so many dollars because there's so many layers involved in it. And you feel shocked. This is the same true in mutual funds, right? And you may be wondering, why is this so? Well, the reason why it is so is because you as an investor do not have the time, and I understand the patience to learn about stocks, to learn about shares, and to go invest in individual companies by yourself. So what do? You rely on someone who you heard from a friend or someone saying this guy is good, this mutual fund, he's giving this kind of return, and you're looking to invest and you're looking to save. And you're having FOMO and you don't want to miss out in this market rally, and everybody seems to be making money now in India. Everybody seems to be sipping. So you latch onto it. I get that. But do keep this in mind. When you are giving every rupee, only so much of the rupee is actually going towards working for you. Quite a bit of that rupee goes into helping these mutual funds and these distributors getting paid. And it's rightfully so. They're doing the work for you, so they deserve to get paid. I'm not making any qualms about it. If someone is lifting my luggage and my suitcase for me in the railway station or the airport, I'm obligated to pay them for their service and not crib about it because I'm finding it very hard to lift my own suitcase and walk around. So do keep this in mind. This is the report which came out. Albin was talking to me about was these guys have been accused of charging more than the allowed limit. That's a cap amount which is allowed. I think is at 2%, and they've been accused of crossing the threshold in more than 2%. Though the distributors have come back and pushed back at the regulators saying, no, your data is not accurate, it is wrong, you need to analyze it like this. The report is what it is. So what is my advice? Well, my advice breaks into two parts. If you have the time and the bandwidth to learn, please make an effort and become an investor and a business owner and try and buy directly into businesses, because that is where the maximum returns are. If you do not have the time and the inclination to learn this, I understand, then look at passive funds for the long term, because in the long term, they will yield you better returns. But I do understand there is a segment of us, our group, our tribe, who are looking for returns in the short term. They do not have the bandwidth to wait for 10 years, and they do not look at anything beyond a few years. For those guys, mutual funds can be attractive, and I can understand that. In the short run, which is between 2 to 4 to 5 years, some active funds can be more attractive than passive funds. For those reasons alone, In the next video, I will get into talking in depth how to look at mutual funds and analyze mutual funds if you are interested in mutual funds. This is not an advertisement for mutual funds. I'm not saying you should do it, nor am I a SEBI registered appointed person to tell you which funds to do. I just want to walk you through the basics so you know the ABCs of it. So if you do decide to venture in that world, at least you know which way the signs are, the road signs, what they mean, and which direction you should be driving on the road. It's my basic wish to give you in the next video. So anyway, I'll see you in the next video where I'll talk this in more greater detail. Till then, do like this video and do share it with your friends and family. And I'll see you in the next video soon. Thank you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.